The stock market volatility continued into Thursday, March 13th, 2025, as President Donald Trump continues the threats of tariffs and continues implementing tariffs, which, on top of the already weakening macroeconomic picture, is adding further concern from stock market investors. The S&P 500 index is down another percent today. The Nasdaq is down 1.38%, and broader market risk assets are down considerably. So I made a couple of moves this week regarding to and responding to this stock market volatility. The changes in prices created some opportunities, and I took two actions that I wanted to share with you in this video. So let's take a look at those details.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so considering that Tesla is one of the most popular stocks in the market, you have probably seen the declines in Tesla's stock price over the last month and a half. It's down roughly about 50% off its highs, and the valuation has come down considerably. So on Monday, about early morning, when the price was down about 9%, not when it was down 15%. I made this move much earlier than that. It was down around 9% when I made this move. I closed my Tesla short positions. So I had short options for Tesla stock, and I had bought those options. If you remember, I reported it to you all at around when it was over $400 a share for the stock price. And when I closed those positions, I had made over 100% rate of return on those Tesla shorts. Now, when I made those initial purchases shorting Tesla stock, the valuation was over 100. It was trading at a forward price to earnings of over 100. You can compare Tesla to car companies, or if you are convinced, like most Tesla stock investors are, that it's a tech company, then you can even compare it to tech stocks. And Nvidia, Microsoft, Amazon are trading at forward price to earnings of around 20 and 25. Tesla was trading at a forward price to earnings of over 100. So Tesla's stock was trading at over 4 or 5 times the valuation of some of these other proper tech stocks that are already generating billions in dollars of revenue from AI, while Tesla is only hoping and dreaming to one day generate those kinds of revenues from AI. And so I felt, and if you watch my videos, I repeatedly stated that I felt Tesla stock was ridiculously overvalued at those valuations at over 100 PEs. So I shorted and I closed those shorts, and I made a nice profit on those positions. The reason I closed it, you might say, isn't it still overvalued? You look at the valuation, it's trading at a forward price to earnings of 65 right now, even after the big declines, whereas the tech stocks that I just highlighted are at 20 and 25. So Tesla's still trading at more than twice the valuation of Amazon and Microsoft, and more than 3 times the valuation of Nvidia, arguably the leading AI stock in the market today. So yes, I do still believe Tesla stock is overvalued, but I don't believe it's ridiculously overvalued like it was a little over a month and a half, 2 months ago, right? So it's overvalued to a normal level, I feel like, with this company, because this company has persistently been overvalued. It's persistently traded at a valuation above what I felt and I feel that it deserves. And that's actually a credit to the company's management team. The management team, and most notably Elon Musk, has done an absolutely excellent job at convincing investors that the stock deserves this premium valuation. If you look at my comment section, and some of you watching right now are probably feeling this way too, you might be absolutely convinced that Tesla's going to deliver trillions of dollars of revenue from driverless car technology before the company even has one driverless car on the road, before the company even starts testing driverless cars, right? That's an absolutely excellent job of marketing. I mean, there is no other situation that I can think of out of the years and years of investing that I've been doing and the research that I've been conducting, where a company's management team has been so successful at convincing the investing public about its prospects and getting the public to pay these super premium valuations for its stock, right? So kudos to the management team. And that skill, that marketing skill, it is a skill, right? It is absolutely a skill. That marketing skill is the reason why I closed those short positions and didn't continue to hold on to them, even though I still feel the stock is overvalued. Because I have to be aware of the fact that the company's management team can create another marketing campaign that gets investors excited and gets the stock price back up to these nosebleed valuations. I'm not concerned about the company actually delivering earnings or cash flow that justifies this valuation. I think the probability of that is extremely low. But I am concerned about the company's excellent ability to market the stock in a way that gets the valuation up back to nosebleed levels. So I wanted to lock in these profits where the company's stock price is now, in my opinion, just overvalued and not ridiculously overvalued. So that's one trade I made on Monday. Another trade I made is to buy Uber stock. Uber is now trading at a forward price to earnings of 17. And Uber's stock is also related to Tesla in a way that Uber's valuation has declined considerably because of that excellent marketing job that I talked about from Tesla. Tesla has convinced so many investors that they're going to achieve driverless car technology, but not only just achieve it, but make it so widespread that it kills Uber's business. And so Uber's business is trading at a valuation way under the valuation I think it deserves. And it's because investors are almost convinced that Uber's business will be completely done with 5 years from now or 10 years from now. Uber will not be in existence. And so I disagree with that. And I think Uber is an excellent investment at these valuations. And even if you look at my discounted cash flow valuation for Uber stock, I have the intrinsic value at $112. The current market price is $71. This is right around the price I bought Uber stock on Monday. It was around $72 per share. So those are the two trades I made on Monday in response to this market volatility, in response to the big changes in valuation that I'm noticing in response to this volatility. And I'm getting ready and prepared to make more investments if this volatility continues, if there are more price declines. I'm looking to add more to my portfolios. This is an opportunity I haven't seen in a couple of years now, since the stock market has just been soaring higher for 2.5 years with little opportunities to buy these dislocations in prices. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.